Hello and good morning, everybody. Welcome to Kraken Energy's rescheduled presentation for the Kinvestor Critical Minerals and Mining Conference, which took place a couple weeks ago. I'm joined today by Kraken CEO Matt Schwab. Matt and his team are advancing its 100% owned Apex uranium property, which is recognized as Nevada's largest past-producing uranium mine, and have recently released some drill results at Harts Point, which look rather interesting. So Matt will be talking about that in today's presentation. So here we are, Matt. Take her away. I'll go backstage, and we got a bunch of questions already in from people that have registered. So we'll tackle those once you're done your presentation.
Awesome. I can't wait. Thank you, Arlen, for the intro. Thanks for having me back. My apologies for needing to reschedule, but I'm glad that you took the time to reschedule this presentation for your viewers. I think this is the third time now that I've presented for Kinvestor. And, honestly, not a lot has changed in the last year and a half as far as our strategic direction as a company. Yes, we've added some assets, yet we continue going down that road of evaluation, looking at new opportunities as we move forward with our exploration portfolio. But at the end of the day, we are still the same junior uranium exploration and development company that we were when I started back a year and a half ago. And we're still focused, for the time being, solely on the U.S. market and U.S. assets. In saying that, I'm sure most of the people on this call are not surprised by the fact that we have seen a near unprecedented rise in the demand for uranium around the world over the past few years. And in conjunction with that, a growing deficit where some projections are still showing, 5 to 10 years out, looking at a 100 to 200 million pound deficit annually around the world. And as we move forward, looking at this uranium market, yes, we've seen a little pullback in the uranium spot price, but I still think the fundamentals are very strong moving forward, especially when we see continuous news coming out about current producers having issues meeting their production or their supply contracts, with upcoming producers announcing that they're seeing delays based on unexpected cost and environmental process or environmental permitting. All of these things lean to our favor, to be quite honest, especially when we look at North America as a bigger part of that deficit. As I've said before, the United States market is actually one of the most drastic examples of that growing deficit out there in the world today. We have seen over the past few months, a couple of the larger mid-tier companies are announcing that they're going to be bringing some of their past producing assets into production. And that's all a great part of the bigger portion of this picture. But the fact is that we're still going to be looking at a 40 million pound plus deficit moving into 2026 for the United States. As far as my knowledge goes right now, I think most of the current supply contracts to U.S. utilities are running out at the end of 2025. And that puts us in a very great situation where I really do think that the U.S. government is going to be forced to look at this more aggressively and look for opportunities to incentivize a more aggressive approach to exploration and development of uranium in the United States. All that being said, I think that Kraken Energy is very well situated. Right now, we have 4 high-grade uranium assets in the United States, 3 in Nevada and 1 in Utah. And I will reiterate, I like to say this, is that the 3 projects we have in Nevada are past producing assets, as Arlen mentioned earlier. The reason for that being is that they were producers back in the 1950s and 60s, but they were shut down almost overnight when the Atomic Energy Commission removed those incentives for domestic uranium production in the United States, which gave us a great opportunity to build up our current exploration portfolio, looking at these projects that have advanced infrastructure in place and also non-compliant reserves in the ground that have not been brought to their potential. We're only looking at tier 1 mining jurisdictions, of course, right now looking at new opportunities and project evaluations in Nevada, Utah, Colorado, and Wyoming. And of course, we're looking at regionally high grades for the projects that we're exploring and looking to bring into the portfolio. Right now, our projects have average historic production grades up to 0.25% U3O8, surface samples up to 6% U3O8, and a great extent on our properties across surface. Looking at Apex as an example, we have 17.5 kilometers of strike length of shown uranium mineralization expression on surface through radon sampling, airborne radiometric sampling, and ground truthing through prospecting with assays, again, up to 6% U3O8. So amazing potential across our properties. I did say that there's significant infrastructure across those projects that we do have. They are all 4 road accessible to and throughout the properties, and we do have access to electricity and water on all 4 properties, despite being in the deserts of Nevada and Utah. Another thing we're focusing on, of course, is the additional economic potential on our properties through the presence of other commodities of interest. In Nevada, definitely looking at gold, copper, silver, nickel, and molybdenum, and more recently on our Harts Point property in Utah, the potential for vanadium as well. And I really do think that the team that we have in place right now does give us the best possible chance of making our strategic goals a reality moving forward. Speaking of the strategic goals of the company, same as day one, we are looking to put in place a realistic and reliable hub and spoke based mining model for domestic uranium production in the United States. I've said it before, and I'll say it again, we do see our flagship properties of Apex and Harts Point having the potential to serve as the hub of that model as we continue to go down the project evaluation route and bring in additional satellite projects to really build out the larger scope of that model. Team hasn't changed much, still led by myself as CEO and our chairman, Garrett Ainsworth, both with a long-standing history in the exploration for uranium industry, largely based out of the Athabasca Basin in Saskatchewan, but slowly bridging out around the world. Garrett is now the CEO of District Metals, looking to build out uranium resources in Sweden, while I focus my efforts in the United States. We do have a very qualified team standing behind us with our CFO and our senior geologist based out of Vancouver. And we continue to look at new opportunities to bring in more qualified people to give us the best possible chance of making those strategic goals a reality in the shortest time frame possible. Just a quick snapshot of those projects that I mentioned. As I said, 3 in Nevada, 1 in Utah, all with their own merits, and I will get through those in the coming slides. First off, Harts Point, this is the newest addition to our company's portfolio. It's right in the middle of the Colorado Plateau, and as I like to say, we call this the Athabasca Basin of the United States. Reason being, it's produced over 590 million pounds of uranium since the 1950s. Beyond that, we're only 30 kilometers to the west of the Lisbon Valley anticline, which is a very important point because that is what we're using as a direct geological analog for Harts Point. Lisbon Valley produced 81 million pounds of uranium up until 1989 at an average grade of 0.3%. And beyond that, we're only 64 kilometers north by road of the White Mesa Uranium Mill, which is the only operating conventional uranium mill in the United States right now. As Arlen pointed out, we just wrapped up our maiden drilling program on the property. As you can see on the map right there, we drilled 2 holes, which may seem pretty minimal, but the idea behind this was that we wanted to validate the exploration thesis that we went through and discovered in the due diligence, as this is an option agreement for the company. And in our maiden drilling program, what we discovered is that we drilled 2 holes. The first one, HP 2401, where we intersected 43 feet of anomalous radioactivity in that drill hole. The second one, HP 2402, intersected 53 feet of anomalous radioactivity, respectively 25 and 36 feet within the Shinley Formation, which is the formation of interest, because that is the formation that produced at Lisbon Valley and as well to the west of our property, where another 300,000 pounds was produced at an average grade of 0.3%. Just to elaborate a little bit on the press release that we put out recently, the reason that we're excited about this is that the discovery of Lisbon Valley was based on a drill hole program that had 7 drill holes over a strike length of roughly 1.5 kilometers. In that 1.5 kilometer strike length, only 3 of those 7 drill holes hit radioactivity. So the fact that we drilled 2 drill holes across 5 kilometers, intersecting elevated radioactivity over significant intercepts, is a great step forward for the company. It validates that exploration thesis and gives us more reason to move forward with a more aggressive program later this year on Harts Point. We are in the middle of the permitting process for an additional 10 drill holes to follow up on those initial results. We're very excited to be going through that process, and we look forward to putting that in place later this year. Moving on to Nevada, as I said, we've got 3 projects in this state. Apex was the original and still is the flagship of the company. It was responsible for 50% of Nevada's historic uranium output at an average grade of 0.25%. Garfield Hills, we wrapped up our maiden drilling program on that property early in 2023 with very encouraging results, hitting on all 11 completed holes on that property. And we look forward to planning a phase 2 project on that property later this year. Huber Hills, last but not least, it was Elko County's largest past uranium producer at an average grade of 0.24% as well. Looking at Apex, the property is very nicely situated, only 5 kilometers south of the small town of Austin, Nevada, which is a great logistical base for the property. Sits a little over 6,000 hectares right now, and it is 100% owned, except a small NSR, 2% over the original claims at Apex, which makes up about 10 of the original claims on this property. It's a very small portion. The property is road accessible to and throughout, access to electricity and water, so it's very well situated for exploration moving forward. Here's just a snapshot of the historic recognition of the property. As I mentioned, it was responsible for 50% of the historic uranium output for the state of Nevada. 106,000 pounds was produced at an average grade of 0.25%. But I do like to reiterate that this project was shut down well before meeting its prime. There is still a non-compliant resource on this property. I won't get into the details of it, but it's really based off of the slide coming next, right here. Looking at results like 1.3% over 3 meters, 0.4% over 34 meters, and 0.5% over 15 meters, it's really easy to start building up a resource based on numbers like that. We do have confirmation, verbal confirmation from the U.S. Forest Service that we will finally, after a 2-year wait, be able to start breaking ground on this property as soon as August 1st of this year to kick off drilling around the original Apex mine. The initial focus being to start infilling these results, bring this into a more compliant state, and use that as a baseline for advanced exploration across the rest of the property. Speaking of which, what you can see here on the right-hand side, for anybody who's seen the slide before, that is the VTEM survey that was completed in late 2022. The reason we flew this survey was to correlate what we saw at Apex on the far northwest side and Lowboy at the far southeast side, both past producing assets, where we see a very distinct graphitic and sulfidic alteration zone immediately associated with the uranium mineralization in both locations. We wanted to see if that geological contact and horizon extended across the entirety of the uranium or the Apex property. And to our delight, of course, that is what we see in this project right here. Beyond that, we have gone out and we have done additional airborne radiometric surveying, ground radon surveying, and prospecting to confirm that there is surface expression of uranium mineralization across the entire extent of that 17.5 kilometers. As I previously mentioned, we are in the final stages of permitting, and we look to be breaking ground on this property around the original Apex mine as soon as August 1st of 2024. That is a huge step forward for the company. I think a lot of shareholders have been waiting for that for at least 2 years now, and I'm very excited to say that that is within sight. I did mention that we are focused on the value add through the other economic commodities of interest on our properties. Apex is a perfect example. It actually started off its life in the early 1930s as a silver mine, grades of up to 7,300 grams per ton silver. We're recently up to 15 grams per ton gold. And of course, the main point behind this being the very important continuity of uranium mineralization on the property, where a 250-ton bulk sample came out of Adit 2 back in the 1950s that sampled over 0.17 or 0.7% U3O8. So really, it has been a long wait to explore the enormous potential behind this property. We're very excited to say that that is within sight, and we will be moving forward with that in 2024 to really start realizing value for this property and the company as a whole. Moving on to Garfield Hills, very nicely situated 3 hours southeast of Reno, Nevada, and only 12 kilometers east of Hawthorne, Nevada. Again, a great logistical base. Property is very accessible by road throughout, as you can see in the map on the right-hand side there. Property sits a little over 1,100 hectares, 100% owned with a 2% NSR, but we can purchase 50% of that back for a one-time cash payment. Here's a quick look at some of the results across the property. So through drilling, both recent and historic, we're seeing grades up to 0.036 or 0.26% U3O8 over 12.5 to 14 meter intervals. And more excitedly, in my opinion, are the surface samples that we've seen from our prospecting very recently, over 1% U3O8. Here's a look on the left-hand side there of the cross-section through the maiden drilling program on the property, showing continuous zones of uranium mineralization starting near or at surface, which is very exciting. On the right-hand side, you can see all the current target areas across the property, largely brought together by the airborne radiometrics that we flew in the property, where you can see the reds, yellows, and oranges really bring out that surface expression of radioactivity on the property. The dots across the map showing where our team has gone out and ground truth those with a handheld spectrometer, which differentiates between uranium, potassium, and thorium. That is what brought us to the soil sampling and the surface sampling, which gave us that 1% U3O8 surface sample. And in the end, what you can see right now is a 4.5 kilometer strike length of expressed uranium mineralization on surface, going from 0.16 to over 1% U3O8. There is significant potential on this property for a high-grade uranium discovery at depth, and we are looking forward to planning that phase 2 program later this year. Moving on to Huber Hills, as I said, last but not least, it is the smallest of our properties in Nevada at only 334 hectares. It does encompass the historic racetrack open pit mine, which produced at an average grade of 0.24%. More recently, in 2007, two 4.5 meter channel samples were taken over that racetrack open pit mine that came back at 0.102 and 0.149% U3O8. Last summer, our best sample came back at 0.237% U3O8. This property is 100% owned, as it was a staking opportunity and not an acquisition. So there is no NSR. It was a great opportunity for an acquisition for the company, and we look forward to planning some baseline radiometric surveys and completing more prospecting on this property over the coming year. Here's a snapshot of the progress that we've made across the 4 properties that we have in the portfolio right now, showing past progress and where we're looking to move in 2024. So Garfield Hills, as I mentioned, we did wrap up that maiden drilling program in early 2023. Very encouraging results with continuous mineralization up to 12.5 meters. We are looking to kick off that phase 2 drilling program later in 2024 based on financing. Apex, of course, that is our immediate focus for the company, looking to make sure that all benchmarks are met for the permit to be in place for drilling to commence August 1st of 2024. Huber Hills, still earlier stage, looking to put in place those airborne radiometric and magnetic surveys to better understand the geology, do some more prospecting, and really build up our idea of the geology on the property before we plan a phase 1 drilling program, potentially later in 2024. And Harts Point, again, wrapped up our maiden drilling program only a month ago. Very exciting initial results over that 5-kilometer strike length where we intersected 2 drill holes ranging from 42 to 53 feet of anomalous and elevated radioactivity on those 2 drill holes, and looking to plan a phase 2 drilling program later this year. Here's a recent snapshot of the capital structure of the company, trading around that $6 to $7 million market cap right now, still fully diluted, 58 million shares fully outstanding, no warrants in the structure. After all expenses paid at Harts Point, we still have a little under $2 million in the treasury right now. Still a very tight structure with 22% of the company being held by management and close insiders, with about 60 to 65% retail. And just to wrap things all up, I do think that we are very, very well positioned as a company with the 4 assets that we have to really capitalize on the growing momentum in the uranium industry, looking to really capitalize on the growing deficit in the United States as the United States government realizes how critical it is to take steps to ensure energy security for their country. Our projects are very well placed with significant infrastructure already in place. Additional value add through other commodities of interest on the properties. And I do think that our situation with the team that we have in place does give us the best possible chance of making the strategic goals of our company a reality in a much shorter time frame than a lot of our competitors out there in the market right now. So with that being said, I will hand it back to Arlen, and I'm happy to open it up for any and all questions that you might have.
Right on. That was a very good comprehensive update, Matthew. Thank you. A bunch of questions coming in here, and I'm very pleased to hear that update on Apex. I know people have been waiting a long time to start drilling that asset. What have been some of the challenges in getting drilling permits in the United States? Maybe you don't have to go by asset, but generally. And are you seeing a shift in sentiment towards the regulators based on what the U.S. government bodies are now saying about onshoring production to speed up, your ability to get drilling permits?
There's 2 real big challenges that I've seen in the past year and a half now at Kraken Energy. And then one of them is really dependent on where you're situated. So the first one being, and it's very related to Apex, is getting a permit in place with the U.S. Forest Service. And this is a fire that I've been putting out with shareholders the past year and a half, because promises were made before I came onto the company that we'd be drilling Apex by September 2022. Unfortunately, and I didn't even realize it when I first came on board, was that it's a much longer process, no matter how you look at it, than a lot of people would like to admit. So it is roughly a 2-year process to have permits put in place for any exploration on U.S. Forest Service ground in the United States, plain and simple. We've learned a lot through that process over the past year and a half. We've gone through all the relevant steps to make sure that we have a great relationship working with the U.S. Forest Service, especially moving forward as we need to plan more permits on that ground. But it's been a process, I can tell you that, and it's long overdue for us to finally have that within line of sight, and I'm very happy to announce it. I'll be even happier when I put out the press release saying we have the permit in hand. But looking forward to a confirmed date of August 1st. I think that should make a lot of people out there happy, because I definitely am. The other one being, and I think this is not just a U.S. issue, I think this is just the growing exploration industry across the board, is environmentalist groups across the world who step in and feel like we're doing the wrong thing and we're doing it irresponsibly. That was a big issue with our first permit at Harts Point. We had our permit issued back in June of 2023, and we were requested by the BLM to pause drilling due to concerns raised by a local NGO, non-government agency or organization. And you know what we did? We did what we were asked to do. We stepped back, we reevaluated to make sure that we were following the permit and environmental regulations to the letter of the law and above. We have gone above and beyond in every way to make sure that our exploration endeavors are not hindered by groups like that going forward. So again, a learning process. We definitely took what we could from it, and we were successful in having our permits reissued at Harts Point within 3 weeks from our second application. So we learn from every one of these hurdles that we go past. We take what we can from it, and we better our company moving forward because of it. So those are the two big ones that I've encountered so far. And like I said, we've moved past them. We've put our permits in place, or we're doing that right now. And I think we're better off because of it.
Yeah. Question on the permit. Once you receive drilling permits and you've completed a drill program, then want to go on to a second phase. Are you starting from scratch all over again on the permitting process, or do you, or can that be that second drilling permit come a little quicker because of your relationships, and because of your integrity in the work that you're doing?
I like how you ended that question, and it is based on the relationships you make and the integrity that you have, and that is something we've very much focused on. Through our permitting efforts, through our conversations with the BLM, both in Utah and Nevada, and the U.S. Forest Service in Nevada. And I've asked that question to both of those regulatory bodies multiple times. Is it going to be quicker because of the relationship we have now, because of the steps we've taken? Can we use the baseline surveys that we've already completed and paid for moving forward? And their answer unequivocally is yes. You will have an easier time moving forward. You will be able to streamline that process, make it easier, make it quicker, make it cheaper, because you've taken the right steps from stage one moving forward, rather than trying to skip steps, shortcut them, and get to the end goal quicker. So we've done it right, and I've received that feedback from both regulatory bodies that we will have an easier time in the future. So
yeah, right on. I'd like to talk more about the Harts Point results, and the analogy in the Lisbon Valley. And I'd just like you to repeat again what you said about how the Lisbon Valley anticline was discovered, and what you've done with your first 2 holes, and what you're seeing, and why you're so excited about that. Because I think that's something that people should really listen to.
I think so as well. I knew that based on our press release, there would be an educational component to this, because again, this is a joint venture. So we did our due diligence. We looked through the data rooms that we had, and the exploration thesis is relatively unproven. Looking at historic oil wells, looking at the gamma responses in that, and then trying to match up uranium mineralization based on that. Because again, radiometric spikes can come from potassium, radium, and thorium, all three, right? So it's a swing in the dark to understand which one you're looking at if you're just looking at a gamma well. But knowing the geology of the area, we were basing Harts Point on being a direct geological analog to Lisbon Valley, again, which produced 81 million pounds of uranium, average grade of 0.3%, all the way up until 1989. Now, the point that a lot of people don't understand is that at Lisbon Valley, the mineralized formation was the Mossback member of the Shinley Formation, which is the lowermost part of that formation. That formation at Lisbon Valley ranges anywhere from 2 inches to 45 feet. And laterally speaking, it can go from 2 inches to 45 feet in a matter of feet. So
Yeah.
you can miss it by feet.
Interesting.
That discovery program at Lisbon Valley, as I said, was 7 drill holes across 1.5 kilometers. Only 3 of them hit radioactivity. 4 of them came up completely dry in 1.5 kilometers. So that shows you how close you can be and how far off you can be. The next stage of exploration at Lisbon Valley was that Rio Algam came in and drilled 175 drill holes to prove up the deposit. They knew that it was not laterally continuous, that they had to very closely identify where that mineralization was, and hence drilling 175 drill holes. So the fact that we did not hit the 3 meters of off scale that was shown in those drill holes at Hart's Point is not a big concern to me. What the grades come back at is not a big concern to me. And that sounds strange being the CEO of a uranium company.
Yeah.
I'm more concerned with the fact that we hit uranium mineralization on 2 drill holes across a 5-kilometer strike length where they missed 4 drill holes on a 1.5 kilometer strike length. Yeah. I think that is a very tremendous success for the property. It validates the exploration thesis that we saw and we realized in the due diligence on the property, and gives us justification to move forward with a more aggressive project on the property. So the next stage is that we plan to drill 10 drill holes, 5 drill holes from 2 drill pads on the property. The southernmost of those 2 drill pads, actually, one that wasn't drilled on the last project. But that will give us a very good understanding of how that river channel that formed the Mossback member of the Shinley Formation actually moves through the property. Because I do believe that based on the results that we have, there is still significant potential for a very large-scale uranium deposit on that property. So we will be moving forward with that. I'm very excited about it. I can elaborate on that more if needed, but I think that covers the basis on why we do see that project and that drilling program as a huge success for the company.
Okay, cool. What are the depths that you're looking at Hart's Point?
So Hart's Point ranges anywhere, actually, based on a recent drilling, anywhere from 380 to 425 meters. So okay. Yes, it's deeper, of course, than the at surface assets that we have in Nevada, but it's a very simple geology, despite that pinching and swelling in the Mossback Formation. The Shinley is very straightforward. It's a very thick sandstone formation. So it would be very straightforward room and pillar style mining on that property. So infrastructure would still cost far less than most other present day underground mining situations for uranium.
Mm-hmm. And any potential for ISR production or ISL production?
No, unfortunately, because the cap above and below are permeable. So okay. Your fluids would move out through those formations. Yes, there is an option to do a similar thing as Denison does in the Athabasca Basin, where you freeze above and below. Yeah. But you need a very significant high-grade asset for that. So that depends on the coming results. Yeah, your CapEx would explode if in that situation. Okay, let's talk about high grade. You're talking about 0.3%, 0.3, 0.25. I think a lot of investors, view high grade looking at the Athabasca Basin. So let's talk about the pros and cons of crazy high grade in the basin and versus, what you talk about high grade in the US. No, that's a great question. I get asked that all the time, to be honest. I started my career looking at 90% grades in the Athabasca Basin at Rough Rider, at Arrow. That's what I was used to, and that's what I really based the start of my career on. But moving into Kraken Energy, I realized that there was much more potential for lower capex properties that have mineralization at surface or near surface with still outstanding grades as far as the worldwide perspective goes, to fast track projects to a production ready state. You asked about kind of the pitfalls with those high grades in the Athabasca Basin. They're wonderful. They're unmatched around the world, plain and simple. I won't discount that at all. But the infrastructure costs, the hurdles that you have to reach to get to production are significant. I think a year ago, I was giving a presentation and somebody told me that Arrow was going to be in production in 4 years. And I think I actually laughed on the presentation. I said, no, it's not a chance. And they just released, a week and a half ago, that costs are skyrocketing and that environmental permitting is taking longer than expected. And they're going to be adding years to that production deadline to get to actual development. It's not unexpected. People are overly optimistic with the properties in the basin. That's the way it goes because everybody gets excited about grade. But there are going to be unexpected hurdles, especially when you're developing down to 1.5 kilometers, 2 kilometers depth. That's just the way it goes. It's not rocket science. That's just logic, common sense. And again, looking at the fact that infrastructure is really hard to put in place. Look at Centennial, look at Millennium. They were discovered before I was born, I think, actually. And they still haven't seen the light of day.
Depends how old you are.
And they're fantastic, world-class deposits. But because the infrastructure is so expensive to put in place, it takes a long time to bring those to the light of day. So when I saw the opportunity for Kraken Energy, and I looked at the initial asset when I came on of Apex, and I'm seeing surface samples of 6%, when you can easily open pit a mine that has a non-compliant resource of upwards of 25 million pounds in place, that makes a lot more sense realistically.
Mm-hmm. And the quicker timeline production, the quicker you can capture this upcycle that we're seeing, right?
Exactly.
That's obviously the name of the game for sure. Okay, just a couple more questions, kind of a little bit around your stock performance and your capital requirements needs. Maybe they're hand in hand. I don't know, but maybe I'll just let you comment on that.
Sure. Again, those are very common questions that I answer on a regular basis. I'll start with the share performance. Two big factors are responsible for the share performance we've seen over the last year and a half. First one being something I've already touched on. Everybody who invested in the company in our last financing in early 2023, sorry, or 2022, sorry, $11 million, was banking on the fact that we would be drilling Apex in September 2022.
Right.
So I've been putting that fire out for a year and a half now, trying to explain to people that to no fault of their own, the previous management just did not understand the permitting process for U.S. Forest Service ground. So there were promises that were made that just could not be met. And I'm very happy that I'm finally in a position to be making good on those promises, to be saying that we will be drilling Apex in 2024. That's a huge weight off my shoulders. But in that process, a lot of people lost faith. They jumped off ship. They dumped their shares and they walked away. And I don't blame them for that. But unfortunately, we suffered the consequences. The other factor being that when I came on board, I didn't actually realize how many legacy shareholders there were with the company. I think when I came on, there were something like 24 million shares between 2.5 to 5 cents with the company. And most of those people, again, are not affiliated with the company anymore. So yes, the founders are still very deeply invested in the company. The founders still stick around and give insight and advise us on a daily basis. But a lot of those legacy shareholders have no vested interest and no reason to be here. So every time they came out of escrow, those shares got dumped onto the market. And again, we suffered the consequences. There's only so much I can do when 1.5 million shares come out of escrow and get dumped onto the market.
Yeah.
The market sees that as a bad thing, and we definitely took a downturn because of it. But we, on a good note, we have more or less cleaned that up. I think there are only 1.8 million shares of that 24 million still outstanding in escrow. And I think we're very well positioned to combat that as we move forward based on solid news results coming from Apex, Harts Point, Garfield Hills moving forward. I think we're very well situated to take care of it and move forward in a better situation.
Yeah.
As far as sorry, go ahead.
No, go ahead. I was gonna say, yeah, your market cap is around 6 million or 2 million cash. So you're a $4 million value right now in the market.
It could be worse, but it could be better.
Yeah.
So that brings me to my next point of capital requirements. Yes, we are financed for the exploration at Apex moving forward if we're very, very diligent on our treasury. But that does put us in a situation where we do need to finance this year. I've been very stubborn because I didn't want to be overly dilutive for the company. I've said that to many people. I've been stubborn and not financing at this point because our share price was not performing the way I expected or wanted it to. But we will be moving into a point in 2024 where I do need to do another capital raise. So anybody who's interested, feel free to reach out to King Communications or myself, and we can chat about that a little bit more in depth and discuss how you can be added to the president's list or take part in that financing moving forward.
Cool. That about wraps it up, Matt. Thank you very, very much for taking the time to to give a presentation to our viewers. We had a lot of people that were waiting for you last time around. So thanks for showing up. That's very meaningful to us.
I appreciate the opportunity to present at a delayed date. So no, it's always a great time, Arlen. Thank you very much.